In focus now, the dollar is taking just a small leg lower, but US GDP clocked in at 4.1% in the second quarter. So what gives? Joining us now is Paul Nolte, Kingsview Financial Portfolio Manager. Paul, why didn't we get a pop to the dollar after the GDP report? Granted, it was just below economists' expectations. Nevertheless, it was a 4 handle.
No, that's true. It was a very good report. It was a little bit below expectations. I think the dollar's run here a little bit in advance of that, but I think the key component of it really was the PCE coming in at 2%, a little bit below 2%, which may give some people a reason to believe that the Fed might not be on the gas as far as raising interest rates. The U.S. is growing faster than most other countries, especially the EU, but the Fed is going to be raising rates this year and maybe into next. So if we believe the Fed, we should be increasing rates, and the dollar should strengthen. We're stuck kind of in a trading range between 93 and 95, and I think we can go higher, but we're still working off a little bit of the run that we've had from 90 to 95. So I wouldn't read too much into the dollar weakness here today, but I think we're going to be seeing a stronger dollar through the end of the year.
Paul, has the temperature come down a little bit as regards tariffs in the pits there?
No, it has, and I think, too, that's part of the reason why you're seeing the dollar doing what it's doing. You're seeing interest rates actually pick up a little bit in the expectations that we're going to be able to do business again, and it won't be an overhang to economic growth globally. So I think that's true. You're seeing that work its way into the markets here.
We almost got above $70 a barrel for WTI this week. Paul, do you see it happening next week?
Oh, next week could be a tough one, but I think it's going to happen. We've been on a very steady increase in crude oil from 50 to about 70 over the last year. We got a quick pop, and then it's backed off here a little bit. But I think the trend for energy prices are higher. We have some problems in the U.S. getting oil to market, and we're doing a pretty good job of exporting it. Demand is pretty healthy globally. So I think we'll see energy prices pick up here over the next 6 months or so. So we should get over to 70. We might even see 75 before year end.
Well, it looks like a busy Friday down there at CME Group. Our thanks to Paul Nolte, Kingsview Financial Portfolio Manager.